Good afternoon, everybody. The August 2019 School Land Board meeting will now come to order. Before we begin, just wanted to recognize Bill Hyenga, an attorney with Hillcore and Diamondback, and William Osborne with Ammonite Oil and Gas. Also, Mr. Maynard with the State Board of Education, officially chair currently?
The chair of that committee.
Chair of the committee.
Yeah, the PSF committee.
Of the PSF committee. Thank you for joining us. Always love having visitors. First item on the agenda is approval of our minutes from the last meeting on July 23, 2019. I believe Mr. Vorsiaga was not present. Mr. Warman, once you've had a chance to review, assuming no questions, comments, I could entertain a motion to confirm.
I read them earlier, and I approve. I move to approve.
Motion is made, seconded, and carries with one abstention to approve the minutes. Next item on the agenda is approval of the consent agenda. Been advised that item number 2A10 has been pulled, but the remainder of the agenda as it is posted is up for consideration. And assuming no questions, comments, or objections, I could entertain a motion to confirm the consent agenda.
Motion?
Second.
Motion is made, seconded, and carries to approve the consent agenda with the modification as mentioned. Next item on the agenda is number 3, consideration of an upcoming lease sale.
Good morning.
Morning. Good afternoon.
Or afternoon.
It's afternoon.
Yeah. It's been a long day.
Normally-
It's been a long day.
Normally it's-
Normally I say good morning when I see the commissioner. Good afternoon. Robert Hatter with the Energy Resources Division. Staff is requesting that the board approve an oil and gas and other minerals lease sale for October 8th, 2019. Staff has received not a lot of nominations, but we've got about 90 tracks. 36 of those tracks, or excuse me, 35 of the tracks are in the Delaware Basin. They're basically scattered tracks that have either been, a lot of things could happen. A company forgot to pay delay rentals, or they've let it go. There are some rough areas in the Delaware where you have what they call complex faulting or rubble zones. So some areas that we've gotten some tracks back. We've also got some deep rights back. So some of those 35 tracks are deep rights only. Something that's out of the ordinary on this sale is we have 26 tracks that are in Presidio County. Presidio, this map's too big for me to put it completely. I can do it like that. This is Presidio. The town of Marfa is right over here. Well, actually, quite a bit of ways over here, but Marfa's in Presidio. This is the Rio Grande. The tracks you see with the red stripes are the tracks that have been nominated for the lease sale. The tracks up here that are striped, those are relinquishment act tracks that which are leased by negotiation, and those are all current leases where you see the MF 119 numbers. So these tracks all leased at $35 an acre. So the range that staff's recommending for the approximately 56,000 acres on the sale would be between $35 an acre and $5,000 an acre. The $5,000 an acre would be those tracks up in the Delaware. The $35 an acre would be these tracks here. There's only one producing well in Presidio County, no infrastructure. That producing well is right here, and it was drilled by a company called Helios just in the last month. It's in flowback right now, so they don't know exactly what it'll make, but it's making about 100 barrels of oil a day. So it's kind of brought some interest to this area. There's not a huge potential given the lack of infrastructure, but staff's recommending we put these tracks up, and these would be the $35 an acre tracks with a 5th royalty on these.
If I understand correctly, somebody makes the nomination,
Yes,
and
sir.
then it goes public to an auction?
Yes, sir. Once we get the nominations in, Energy staff reviews them and recommends pricing, which is based, the price range I have here. And then once the tracks are approved and determined to be open and we've priced them, then they are sent to EnergyNet. EnergyNet then puts them online, and then anyone who wants to can get online and bid on those
Okay.
tracks.
And who made the nomination?
Nominations are technically, I can tell you after, they're technically confidential until the date of the sale.
Okay.
But I'd be happy to let you know afterwards. I just didn't want to say it in a public forum. We recommend these would be a 5th royalty, but everything up in the Delaware would be a 1/4 royalty. For offshore, we'd have our same variable royalty between 20 and 25%, depending upon the date production's established. There's not a lot of activity in the offshore. In fact, in the bays, we just have 2 tracks, and in the Gulf of Mexico, we just have 5 tracks. So not a lot of attention going to state waters these days. Primary terms of upland leases would be 3-year. For offshore, it'd be 10 years, or excuse me, 5 years. And then rentals of $10 per acre. In the offshore, those would escalate to $25 an acre in the 3rd and 4th year.
Here in Presidio, are they going to be depth restricted?
No.
Okay, so.
So I'm not, I know where they drilled this well, but I'm not sure. Actually, to answer your question better, all the leases will have a retained acreage clause in them that will cause the acreage and depths to fall away after a certain period of time. So they'll only get a hole down as deep as they drill,
Oh, okay.
plus a little buffer below that.
Okay.
So if they don't drill too deep, then we'll eventually get our deep rights back, which is what's been happening up in the Delaware, where we're starting, they may be drilling Wolfcamp A, but then you got the whole rest of the Wolfcamp that we can offer up. So we'll start getting some more of those back. So staff recommends.
Robert, is that University land tract
there's no-
adjacent to it?
No, there's
That red shade, or is that?
The stripes are, those are state fee tracks that are nominated. I know this map's a little confusing, but anything with color on it is the permit school fund owns an interest in. The light blue tracks, they're free royalty tracks where we own a 16th royalty based upon the time they were sold. Relinquishment lands were sold between 1895 and 1931. We own the minerals outright, but there's a private surface owner who shares in the revenue with us. The stripe tracks are all state fee, so they go up on the lease sale.
But the orange tracks, is that keyed out to be permanent university fund land, or is that the?
It does look like permit university fund, but I don't think it is.
I was just
I
curious
just
if
haven't,
they were.
I had never noticed any of their property down there. And typically, when they have property, they have a lot of it. It could be they acquired those 2 tracks, but those obviously we're not putting those up.
I was just curious if are they leasing out, or are they proposing?
That's a good
that?
question. I'll find out. But what the board's approving is just a range,
Yeah.
35 to 5,000. So if I find out something different before we send them to EnergyNet, then we'll make an adjustment. But it'll be within the range of what the board's approved.
Any additional questions?
Motion to approve?
Second.
Thank you.
Motion is made, seconded, and carries unanimously to approve item number 3. Items 4 through 8 will be held in executive session. We'll enter into it under Chapter 551, Subchapter D, Section 551, Tech 071 of the Government Code for discussion, consideration regarding pending or contemplated litigation and/or settlement offers. We'll also seek attorney advice or counsel related to 4 through 8 on the docket and enter into executive session under subsection 551, Tech 072 for discussion, consideration regarding purchase, sale, exchange, lease, or value of real properties. Following executive session, we will reconvene an open meeting. The open session of the August 29, 2019 School Land Board meeting will resume with item number 4.
Good afternoon, Board. I am Ken Mills with Oil and Gas and Energy Section in the Office of General Counsel. Staff recommends approval of the royalty payment arrangement as described in executive session. I'd be happy to answer any questions.
Based on discussion, I move to approve.
A second.
Motion is made, seconded, and carries unanimously to approve item number 4. Next item on the agenda is number 5.
Ken Mills, Oil, Gas, and Energy Section, Office of General Counsel. Staff recommends approval of a grant to Texas Mineral Resources Corporation of an option to purchase up to 5,670 acres in Hudspeth County on the same material terms and conditions as in the 2014 option agreement, but with an increased annual option fee, all as being in the best interests of the Permanent School Fund. And as discussed in executive session, I'd be happy to answer any questions.
Based on discussion, I move to approve.
Second.
Motion is made, seconded, and carries unanimously to approve item number 5. Thank you. Next item on the agenda is number 6.
Burton Mitten, Asset Management. Staff recommends approval of the disposition of PSF land under the attached terms and exhibits as presented and being in the best interests of the Permanent School Fund.
I move to approve.
Second.
Motion is made, seconded, and carries unanimously to approve item number 6. Thank you. Next item is number 7.
Thank you, Mr. Chairman. Members, for the record, Rusty Martin, Chief Investment Officer. Approval of this agenda item would constitute your approval of an investment by the General Land Office on behalf of the Permanent School Fund in Turner Multifamily Impact Fund 2 LP. The IEC is recommending that General Land Office invest $75 million on behalf of the PSF in Fund 2. Fund 2 is a newly created $350 million closed-end commingled real estate investment fund sponsored by Turner Impact Capital that will focus on acquiring, improving, and preserving critically needed workforce housing for working families located in densely populated urban communities throughout the U.S. Our relationship with Turner began in 2015. It's resulted in total original capital commitments of $110 million across 2 funds, first of which is Turner Agassiz Charter School Facilities Fund 2 and Turner Multifamily Impact Fund 1, and also 1 investment sidecar associated with TA2. The fund proposal was presented to and discussed with TexGlow Investment Management staff in meetings and conversations between April and August of this year by principals of the Turner team. In addition, Investment Management worked with Townsend to perform due diligence on the transaction during June through August. In addition, Turner principals made a detailed presentation to the IEC and Townsend at our offices on August 15th. In conjunction with this ongoing discussion, review, and analysis, Investment Management staff worked with Townsend and legal counsel to ensure that the investment fits within the framework of the TexGlow PSF investment policy statement and is in the best interest of the Permanent School Fund. Therefore, the IEC is recommending that you approve the investment of $75 million in Turner Multifamily Impact Fund 2 LP. I'll remind you that your approval of this transaction is contingent upon Investment Management's completion of the negotiation and finalization of the legal documentation associated with the proposed investment. And I'm happy to answer any questions.
I move to approve. Second.
Motion is made, seconded, and carries unanimously to approve item number 7. Next item is number 8.
Thank you, Mr. Chairman. Members, approval of this item would constitute your approval of an investment by the General Land Office on behalf of the PSF in PEP Henry Production Partners LP. The IEC is recommending an investment of $150 million on behalf of the Permanent School Fund in PEP Henry. PEP is Pickering Energy Partners. That's the former TPH asset management arm of Tudor Pickering Holt and Company, and is a well-known energy investment specialist. Our relationship with TPH began in 2008. It resulted in total capital commitments of $80 million across 2 funds and 1 co-investment vehicle. PEP is in the final stages of spinning out from TPH to become an independent investment manager, and recently announced that it's partnering with Henry Resources, which is a preeminent private energy operator in the Permian Basin. And they're going to sponsor what's called PEP Henry Production Partners. PEP Henry is a $500 million investment vehicle that will take advantage of the current opportunity to acquire and operate cash-flowing, producing oil and gas properties in high-quality Texas basins, primarily the Permian Basin, at attractive pricing. PEP Henry proposal was presented to and discussed with TexGlow Investment Management staff in meetings and conversations between March and August of this year by principals of the PEP and Henry teams. Investment Management staff then performed due diligence on the proposal during April to August. In addition, PEP and Henry principals made a detailed presentation to the Investment Advisory Committee and Townsend on July the 9th. In conjunction with this ongoing discussion, review, and analysis, Investment Management staff worked with legal counsel to ensure that the investment fits within the framework of the TexGlow PSF investment policy statement and is in the best interest of the Permanent School Fund. Therefore, the IEC is recommending that you approve the investment of $150 million in PEP Henry Production Partners LP. And again, your approval of this transaction is contingent upon our completion of the negotiation, finalization of the legal documentation associated with the proposed investment. I'm happy to answer any questions.
Motion to approve?
Second.
Motion is made and seconded and carries with 1 abstention. I am abstaining from voting on item number 8 and will be submitting a file to the record. The motion carries. So next item on the agenda is number 9.
Thank you, Mr. Chairman. Members, approval of this agenda item would constitute school land board approval of the initial release of funds from the Real Estate Special Fund account, which I'll refer to as the RESFA, to the Permanent School Fund Liquid Account, which I'll refer to as a liquid account, for temporary investment by the State Board of Education until needed by the General Land Office to fund capital calls related to new and existing school land board investments in the RESFA. As you are aware, House Bill 4388 in the 86th regular session amended Section 51 of the Natural Resources Code by adding a new Section 51.414 called Permanent School Fund Liquid Account. The main purpose of 4388 is to create the Permanent School Fund Liquid Account to provide for the temporary investment by State Board of Education of money in the RESFA committed by the School Land Board to new and existing investments awaiting capital calls by the School Land Board's external investment managers. The bill gives the State Board of Education the authority to invest the money in the liquid fund in liquid assets, to keep any investment income or realize capital gains from those liquid assets, and to use funds in the liquid account to pay for the administrative costs associated with managing the liquid account. In conjunction with the creation of that account, the School Land Board is required by Section 4.14B to adopt a resolution to temporarily release from the RESFA funds that are not required for the School Land Board's, and I'm quoting here, anticipated cash needs for the 90-day period following the date of the meeting, end quote. If the School Land Board's cash needs subsequently exceed the amount available in the RESFA during the period, the State Board of Education is required to release an amount requested by the School Land Board within 5 business days of that request. Investment management staff has estimated that our needs, the cash needs for the initial 90-day period, which will run from September 1st through November 30th, is approximately $388 million. There is currently approximately $4.3 billion being held in the RESFA at the State Treasury, and as you're aware, about 2.8 of that has already been committed for future calls. Therefore, in accordance with the requirements of Section 51.414B of the Natural Resources Code, investment management staff is recommending that the School Land Board release $3.9 billion from the RESFA to the Permanent School Fund liquid account during the period September 1st through November 30th, 2019, and retain the remainder to meet its anticipated cash needs during the period. State Board of Education investment staff has indicated to investment staff here that it initially intends to primarily invest the money released to the liquid account in short duration U.S. government and corporate securities, and expects to invest the entire $3.9 billion during the next quarter. Investment management staff will monitor the frequency and amount of the releases from the RESFA to the liquid account during the period, as well as the progress of State Board of Education's proposed investment campaign. In addition, investment management staff will prepare and present new 90-day cash needs assessments and RESFA release recommendations for the board's consideration on a quarterly basis going forward. Therefore, in summary, in accordance with the requirements of Section 51.414B of the Natural Resources Code, which, by the way, goes into effect September 1st, I recommend that the School Land Board release $3.9 billion from the RESFA to the liquid account during the period September 1st through November 30th, 2019, for investment by the State Board of Education in accordance with the provisions of Section 51.414, and retain the amount remaining in the RESFA to meet School Land Board's anticipated cash needs during the period. I'm happy to answer any questions.
So,
This,
go ahead, Gil.
Go ahead, Scott.
No, go ahead, Gil.
This is confusing. So so you're releasing funds of which a majority of them are already committed. Is that correct?
Yes, temporarily. So
Rarely
the way to-
releasing
the
or
way to-
temporarily committed?
The way to think about it is like this. So right now, before this legislation passed and before it became effective, we're required to keep any uninvested cash at the state treasury. And so at the state treasury, it was invested by the safekeeping trust company in basically a very short-term bond fund with a duration of about 1.25 years
But for the account of the,
for the account of the school land board.
land board.
Yes. So what this does is it says, it creates a new account called the Permanent School Fund Liquid Account, and it requires it that any money that's above what we determine we need on a quarterly basis be transferred to this account where it's invested by State Board of Education through TEA, Texas Education Agency.
Okay.
And when we need money to meet capital calls, if it's in excess of what we have kept behind, which we keep keeping behind an amount that's based on our historical experience and what our projections are. And they have 5 business days to provide that amount to us, no matter what it is. If we draw the whole amount, they have 5 business days. So nothing, really the only thing that's changed is we have a different entity that's managing the cash. It's now TEA instead of,
Yeah, so when I read your letter, I was just thinking, is it retribution when we didn't give them any money this past year?
oh, I don't have any comment on that. Is that a rhetorical question?
Gil,
Maybe I
think-
shouldn't have asked it.
I think one of the things is, I've heard that it's been represented by somebody that this new money manager has claimed they can make $200 million a year more on the cash than the comptroller can.
Okay. And that's why they made this,
I don't know why the legislature did what they did, but I'm just saying that's what I've heard. Well, Rusty, on the second paragraph under details on the first page,
Yes, sir.
it says the bill gives the SBOE the authority to invest the money in the liquid account in liquid assets. What does this mean? Keep any investment income or realized gains from those liquid assets.
So it means that whereas when the money, when we had the money at the Treasury and the safekeeping trust company was managing the money, any income earned on those investments stayed in the account. In this instance, any income earned, the SBOE can remove it from the account.
And use it
But-
however they want, or use it for our bit.
Well, it's still part of the permanent school fund, but it would come out of that account. So it wouldn't be subject, we wouldn't have control over the earnings on that. The reason it's written the way it is, restricted to income and capital gains, is so that it's clear that they can't withdraw an amount from the fund that would cause the balance of the fund to be less
Than what was
than what we
deposited.
put into it.
But basically, any earnings on the money in the liquid account
Will go to
is going
SBOE.
to some agency that will make decisions with that money. That's not this agency.
Correct.
That's
let me
that's
ask
what
that.
you're looking
So
for,
where before,
Gil.
when it went into the treasurer, the earnings were to the account of the school land board.
Correct.
But now that this money is going into the SBOE, any money, any interest or any gains go to the SBOE, not to the state land board.
Income and gains.
gain.
Yes.
Okay.
And just so I'm clear, under the statute, the requirement is, I guess what are the confines of what can be invested with the cash? Is it just AAA credit-rated bond offerings, or
Well,
I forgot if the statute was specific?
there
in that.
are no restrictions, but their investment policy statement defines what liquid assets are. It may not call them liquid assets, but it would be highly rated U.S. governments, agencies, corporates. Initially, that's initially. They can invest it in anything that they have the authority to invest in. However, they have to be able to provide 5 business day liquidity for any kind of call that we make on that.
So really, the investments they make they're at risk. In other words, if they lose.
They're at risk to the extent that their entire portfolio is at risk, because it would have the same risk characteristics or the same risk characteristics of a subset of that entire portfolio. So what they've told me is initially they're going to invest in 1 to 3 year, primarily U.S. government securities, but probably also some highly rated corporate securities too. So fixed income, short duration fixed income, and then let some time pass and see how it works. See how good we are at our projections. See if there are any repeated instances of having to make unexpected calls, and then after that's established, I expect that they will start investing, diversifying that fixed income, 100% fixed income component to something else. But it would still be restricted to what's in their investment policy statement.
But Rusty, what I'm asking is, where before, when you went into the Treasury, if you put $1 billion into the Treasury, the billion was not really, it was the securities that they were investing in were just, like Treasuries. In this case here, where they can invest how they want, if you give them $1 billion, if they go invest and lose that billion, you can still call the billion.
Yes.
So they're at
Oh,
risk.
yes.
Okay, so they're at risk. Okay.
Yes.
Okay.
Correct.
On average, what's our average length of capital call periods in which you're called and have to satisfy funding? On average, would you say 10 business days or?
You mean notice from the managers?
Correct.
10 business days. It can be shorter than that. It's more, our experience has been it's more related to the size of the call. For example, if there's a large call going out, the managers are going to give us plenty of notice, because the last thing they want is a lot of people defaulting on a large call like that. So we've never had an instance where we couldn't make the call on time. And we've never had an instance where we have a large call coming, something unanticipated, a large amount, where we had less than 5 business days. Typically, we have 10 business days, and that's the model most of them follow.
Is it true that any money that goes to the SBOE, 50% of that has to be invested in textbooks or educational instructional materials?
So that's not an investment question.
Yeah. Okay. I'll ask
that's-
you different. I
that's-
shouldn't ask you that, Rusty. Sorry.
I'd rather not get
That's
into
fine.
discussing that. Thank you.
The legislature has deemed we were supposed to vote yes on this, so I
was gonna say,
make
we
a
don't
motion
vote
to
because
approve.
we don't vote on this because it's,
Well, it's the
Fancy
law. You're just voting on the dollar amount.
okay, Scott, this is where you get into trouble.
I'm doing what the legislature tells me to do.
So am I.
Staff recommends the number in the deal, which is 3.9 billion.
Correct.
Okay. And we're voting on the amount. I move to approve transferring that amount of money based on what you described.
I second.
Motion is made, second, and it carries unanimously to approve item number 9. Next item, utilizing your term, Rusty, a sanguine quarterly investment report.
I like that.
You like that?
Yes, I do.
Q2.
And it is. So this is a non-action item. This is the quarterly investment report for the period ended March 31st of this year. As you know, the performance measurement calculations and any data that's presented in the report are prepared by our custodial accounting and performance measurement agent, which is State Street Bank and its Private Edge Group. Just a brief economic summary. First quarter GDP increased at an annual rate of 3.1% in first quarter, after increasing 2.2% in fourth quarter. I heard today that second quarter had just been reduced from 2.1 to 2.0%. So quite a different outcome in the second quarter of this year. Unemployment rate was at 3.8%, down from 3.9 at the end of 2018. The Fed left its Fed funds rate unchanged at its March meeting at 2.25 to 250. We know that shortly after that, they lowered it from 2.25 to 2.5 to 2 to 2.25. They also sustained their balance sheet normalization program, which concerns the reinvestment of principal payments from their holdings in agency mortgage-backed securities and the rolling over at auction of maturing Treasury securities. And they also agreed that the timing and size of any future adjustments in their target Fed funds range would depend upon the assessment of actual realized and expected economic conditions relative to their maximum employment objective and symmetric 2% inflation objective. Looking at the real estate market as measured by NPI, the NCREIF Property Index, real estate returned 1.8% for the quarter ended March 31st. Its trailing one-year return was 6.82%. Occupancy was down very slightly during the quarter from 94% to 93.8%, but still that's a very high historical level. And cap rates declined to an historic low of 4.69% during the period. First quarter gross total returns for each of the NPI sectors: hotels up slightly at 0.44%, retail up 1.74%, apartments up 1.35%, industrial continues to be strong, up 3.02%, and office 1.63%. Industrial was once again the best performing sector, and of course that's due to continuing strong performance of industrial warehouse space. In the energy markets, WTI spot crude averaged about $54.58 a barrel during the first quarter. It ended the quarter at $59.49 a barrel, which was a 32% increase from the fourth quarter ending price of $44.22 a barrel. That increase was a reversal of the 38% decrease that occurred in price at the end of fourth quarter 2018, and it was the largest quarterly spike in oil prices since 2009. The reasons: primarily OPEC's expressed commitment to decrease excess supply, an imposition in January of U.S. sanctions on Venezuela, the impending May expiration of waivers on Iranian crude, and continued disruptions in Libya. On the demand side, also, the IEA expects global demand in 2019 to increase by about 1.4 million barrels per day to 100.6 million barrels per day, which is a little higher than its original expectations. Natural gas prices averaged 292 million BTU during first quarter, and that ended the period at 271, which was about 17% below fourth quarter 2018 ending price of 326. That's because we had warm weather in both February and March. Medium-term price upside potential remains limited given continued strong domestic supply growth, which is expected to continue to exceed domestic demand. However, most analysts are still thinking that in the long term, rising industrial demand, LNG exports, and increased exports to Mexico, coupled with continued coal to gas switching, is going to foster a strong long-term supply-demand support. If you turn to the performance measurement tabs on page 2 of the report, we'll go through some of the numbers. Echoing the commissioner's word, sanguine, we had a very good quarter. Just looking at the size of the portfolio first, at the NAV at the end of the quarter was $7.985 billion, so just under $8 billion. The investments were about $3.9 billion of that, or about 48% of the total. As far as performance is concerned, looking at the first line, gross of fees without cash, we were up 5.46% for the quarter versus 184 on the benchmark, so it's a 362 basis point outperformance there. A lot of that was based on infrastructure. The infrastructure sector of the portfolio was up just under 10% for the quarter. Energy was up a solid 4.36%, and real estate was up 3.01%. Looking at the one-year returns, the 14.94% versus 604 on the benchmark. That's 890 basis points of outperformance, or basically a 2.5x. The one-year sector returns, very interesting, breaking that at 1494 down. Energy was up 14.44%. Infrastructure was up 16.67%, and real estate 11.62%. So anyway, you slice it, just really good performance across the entire portfolio. 3-year return was 17.01% versus 643 on the benchmark. That's an outperformance of 1,058 basis points. 5-year return 1474 versus 738 on the benchmark. Outperformance of 736 basis points, or a 2x. And then the 10-year, which we've included in here for the first time, 10-year return is 12.94% versus 666 on the benchmark. Again, about a 2x there. About 33% of our total existing capital commitments were unfunded at the end of the period. 33% of real estate, 32% of infrastructure, and 41% of energy were unfunded. Turning to investments during the quarter, page 3 of the report, and page 15, as you know, we were engaged in a lot of activity at the with the legislature in the first 6 months of this year. So, as you can see, there were no new investments approved during the first quarter or the second quarter of the year.
Rusty, 44% of the energy is unfunded. 44% is unfunded?
41%.
41%?
Yeah.
That's rather high, isn't it? Is that high?
Not really, because energy tend to turn over faster than the other ones. So during the investment period, we can recycle that capital. So no, I don't think it's high.
And given where they are on the energy side, do you think they're gonna call on that?
Oh yeah.
Really?
Oh yeah.
Okay.
Oh yeah. Yeah, I do, because this is not publicly traded investments. This is private stuff, and the correlation is just not that high. There's some, getting to be more commodity price correlation, but for the most part, the private capital investment just doesn't work the same as it does on the public side in the energy space.
Okay.
Looking at the allocations by asset type, page 7 and 8, on a purely invested basis, we were slightly underallocated to real estate. At the end of the quarter, we were at 30% versus a target of 33%. Infrastructure was at 29% versus a target of 32%, and energy was at 41% versus a target of 35%. And these allocations are going to change over time, and they will become more aligned with our policy allocation targets as more of those unfunded capital commitments, particularly to infrastructure, become funded. Geographic diversification, page 11 to 12, we're pretty close to our target allocation. We're at 95% allocation to the U.S. compared to a target of 90%, 5% international. We do have some international exposure coming up in certainly our newest commitment to Westbrook, which is a global real estate fund, and First Reserve Energy, which is a global energy fund. So you should see that international allocation tick up somewhat. As far as the investment manager exposure is concerned, page 13 to 14 of the report, on a invested basis, we're well diversified across a platform of 25 different managers. As you know, the policy statement limits exposure to any one investment manager to no more than 20% of the total portfolio. The top 5 highest exposures at the end of the period were to USAA Real Estate at 9.7%, followed by EnCap Energy at 9.4%, EnCap Flat Rock Midstream at 8.2%, Macquarie Infrastructure Partners 6.2%, and Lime Rock Resources at 4.8%. The co-investment vehicles are grouped by manager and presented separately. The highest grouped co-investment exposures at the end of the quarter were First Reserve at 8%, EnCap Flat Rock at 6.2%, and Intervest at 4.8%. That is the conclusion of my report. I'm happy to answer any questions you may have, but again, from a performance perspective, as a very good quarter.
Very good.
Any questions from the board?
Given the markets.
Thanks for presenting such good numbers.
Thank you. I appreciate your
I'm not
support.
gonna take it home with me this time.
This being a non-voting item and there being no other business before the board, we are hereby adjourned.